Hi, everyone. It's Andrew with The Market Mindset. We're doing a reaction video, and this is to Bloomberg. Bloomberg, of course, a wealth of information to watch all day, BNN and Bloomberg. This is Claudia Sahm, and she's kind of saying there's a lot of reasons to be gloomy about the economy, but also giving us the other side as well. So it was a good discussion. I liked her perspective. Let's take a look to it.
Clear, there's a lot of reasons to be gloomy. Inflation is high, there's a lot of uncertainty. The question is, why are the extra gloominess, right? And things are, as you said, there are a lot of good things. Unemployment is low. It's been low for almost 2 years, under 4%. Like that's really good. And if you ask people, how's it going? What kind of news have you heard about the economy? It's as bleak as when you go back to the 1970s and early 80s, right? It's very
Okay, so there's lots of interesting things that they can do with participation rates and employment rates, and what are the jobs that are on the rise. These aren't high income jobs. These are not on the rise. That's why people are gloomy. Yes, there's lots of service jobs. There's lots of food jobs, Uber jobs. And unfortunately, a lot of people are having to work 3 of those jobs just to get by. She's not getting a chance to talk to them because they're too busy working all the time. But even just your average, mom and pa who has one job doing well, if they were lucky enough, they refinanced their mortgage a couple years ago and they got a 30-year mortgage. They're a bit safer, which is great. But I think they can see around them that there's a lot to be gloomy about. So it isn't just a mythical, everyone's imagining it. They see that, yes, people are being employed, but they're not being employed at Google, at Facebook, at Fang. In fact, a lot of these bigger companies are firing people. And that is what people are seeing is the high-end jobs are being decreased and the lower-end jobs are massively increasing. Let's move on.
early 80s, right? It's very hard to say, oh, that totally makes sense. Like there's these bad things happening in the economy. It's that extra kick. And frankly, that's the piece we want to understand because it could really be telling us something bad is around the corner. People have been doing that for 2 years. And then it's like, okay, what else is going on here?
Well, we can't underplay the importance of inflation to a normal American who is living paycheck to paycheck anyway. Economists love to look at core inflation measures, which take out all the stuff that we spend our paycheck on, right? Food is expensive.
So I love that he said that because that is critical. Core inflation wants to take out, housing, energy, and food. So your bare necessities to life. And it's important to recognize that is, I guess, a metric. I mean, a part of a tool that would be interesting to look at production capacity. Okay, fine. But when you're in the situation, you're asking how does the average American or Canadian feel? That's where all their money goes. And this is where it's interesting. Yeah, I could buy a TV today for the same price I could have bought it for 10, 15 years ago. It'll have more bells and whistles, but same with a computer. I can buy a laptop, $500, TV, $200, $300. So a lot of technology has had almost a deflationary, the amount of bells and whistles to get really cool gadgets and whatnot. But I can't eat my TV and I can't eat my iBook or iPad or any of these other things. Those are great whenever the economy is booming and everything is amazing and everything is within cost range. If my food doubles and if my housing doubles, in the case of the U.S., it's not doubling, but a lot of people didn't lock in for 30 years, and certainly in Canada, you can't. So there's a lot to be gloomy and be concerned about because you've had modest growth. And that's the other thing. There's this imaginary belief that there's all this economic growth. It's so amazing. It's so great. There's been growth, which is inflation to some degree, but you printed trillions and trillions of dollars, and we didn't see that much bang for it yet. So my hope is we're starting to see some of the companies, we talked earlier about Caterpillar on another video, starting to see infrastructure flow, but maybe it's going to take a little bit more of a lag factor for these to kick in. Let's move on.
Is expensive. Right now, cars are incredibly expensive. Plus, financing has climbed. Houses are you don't even want to talk about because that's not even affordable if you can find one. So is that the main problem that Americans have?
Inflation has always been something that people would get riled up about, rightly so. right? And the price tags are legitimately higher and they're not coming down. What we've seen this year is it's slowing down. Inflation is coming down. That is uh, a form of relief, and that it could have been a lot worse. And we there's lots of different pieces of good news that don't come up. We found out last week that household net worth for the typical family jumped 37% pre-pandemic to last year. And that was across income groups, demographic groups. You just saw these big increases.
So, okay, the most amount of billionaires were created during COVID. Now, that seems very strange, but that was a historic point in time, which is going to skew numbers as well. Your average American isn't doing that well. They're living paycheck to paycheck. That's the reality. And that's the problem with some stats. You have to look kind of more in depth at them. People got into the stock market and they pumped money into it. They made a bunch of money and they've lost it. Unless like you're down still from pre-COVID. So even if you are in FANG and you had a 60% return this year, you're still not back to where you were. And this is where you're looking at time frames. You go, well, wait a second. Yeah, you're up from from the crash or when they all fell down. It's a nuanced conversation to say the least. We're not back to where it should be. But once again, people are concerned that with the amount of money that was pushed into the markets and not being there, it's a bit troubling. And of course, that's without talking about the cost of financing. That's why you don't see a lot of M&A. You don't see a lot of private placements, a lot of funding of companies, because it costs so much right now. It's so expensive. And until you get that under control, where companies can look to go, we can now raise money in the equity markets instead of, I mean, you're not going to do a bond right now. If you have to do a refinancing, and I believe 10% of corporate debt has a 2-year window or 18-month window that they will have to refinance. If that doesn't come down, there's lots of problems there.
All these big increases, and that matters. Living paycheck to paycheck has been a problem in the U.S. economy for decades. Many people have bigger paychecks, and there's a lot of people who have a little bit of a buffer that have never had it. So it's tough to see all those pieces come together and then have this absolutely bleak outlook for the economy.
Well, Claudia, how much of it is the income inequality, wealth inequality in this country where, the top 10% are doing fine, actually better than fine, but the rest are really struggling with inflation, that type of thing.
We'll pause here because this will end it here because we could go on, but it's very interesting is that this is a good point. People with money, they've built up a buffer and they're sitting in cash and they're waiting on the sidelines. Maybe they've been, made some money back in some of their FANG stock or whatnot. But if you sat in cash, you're doing fairly well. I'll remind people that most of the market was down for the past year, except for the 7 stocks. And that's your 7 big name stocks. So it's a very interesting time. And the politics plays into this just as much as anything else. But my hope would be that a lot of this funding, a lot of this money starts seeing itself played out into real jobs within construction, building roads, building infrastructure, and whatnot. And, it's a reflection of the time. We're living in a very chaotic time. People are uncertain about a number of different things. And until we get a lot of clarity, the markets are going to reflect chaotic times. But we're all hanging in there. From my speaking to a lot of hedge fund managers and people with money and brokers, is they're waiting for interest rates. And that's going to be a bit of a sign. That brings up a whole other conversation altogether. But we'll leave that for another time. But thank you for watching. Leave a comment and tell me what you think.